Okay, number 3, higher tenant turnover. So single family home investor with some fair amount of experience tried a fourplex and found out that the tenant turnover was higher than for single family homes. Do you find this with your properties?
I don't in our new product. I do in our older existing product. So I would agree with that statement, with the exception of new product, which is the majority of our inventory now.
Right. Yeah, I was talking to our Chicago team, and they have issues with turnover. Part of it is some of their properties have 1-bedrooms or studios, and people outgrow them, and so they move. And the other thing is a lot of their units are upstairs, downstairs, and you have a lot of turnover then because the guy upstairs hears the music from downstairs and doesn't like it, or the guy downstairs doesn't like the noise from upstairs, and so you have more issues. Yours are mostly side by side, aren't they?
They are in all of our markets except for our quads in Jacksonville are up and down. But I will say, not that our model is far from perfect, but new construction mitigates a lot of headache, Joe, because you have firewalls and a lot of things in a new building that you wouldn't in a building that was built 50, 60, 70 years ago.
Right. Well, with new buildings too, you can attract a quality tenant.
Yeah, and if things aren't breaking, the thing that makes the turnover is the tenants get frustrated with the quality of the product and things breaking all the time. And if everything's brand new, we have found that, average lease expectancy is about 3 years, whether it's a quad or a single family.
And those are how many bedrooms?
That's a good point, and I'm happy you said that. Minimum 2-bedroom, 2-bath, and then we also do some 3-bedroom, 2-bath. We don't do any 1-1s. I would say stay away.
Yeah, okay, that's probably why you have such sticky properties. Okay, so some things, I'll just run through some ways of mitigating this risk. One is to run the numbers. So what you see here is an example of a duplex side by side with a typical pro forma, and then a fine print down here. You can't read it, but it says that we recommend you have 3 to 6% reserve for vacancy. So like you said, 36 months, 3 years, then that's yeah, if you have a vacancy after that, that would be about 3%, so that makes sense.
Mm-hmm.
So if you really want to be conservative, let's say you have one of those 1-bedroom places where you think you might have higher vacancy, and more turnover. If you want to play it safe, what you can do is plug in 7.5% for vacancy. So how did I come up with that number? So let's assume that you have a 12-month lease, and at the end of the lease, the tenant leaves and you have a month of vacancy. So it takes a month to touch up the paint, clean the carpets, and advertise for a new tenant. So for every 13-month period, you have 1 month of vacancy. 1 divided by 13 is 7.69%, which is ridiculously precise for what's basically a ballpark estimate. So I rounded off to 7.5. And note that that's the worst case. If you had a fourplex, this is assuming that every single person is going to leave after the 12-month period. Not one person is going to renew a lease. That's kind of very, very conservative. But if you plug in 7.5 for your reserve number, vacancy number, and the numbers still look good, then you're probably in good shape, and you might want to, if you're deciding whether to go forward with that property, even with the worst case scenario, if it's still, the numbers still work, then you can move forward and buy that property. If you do get any surprises, it'll be to the upside, most likely. What number do you use in your pro formas?
For the vacancy?
Yes.
I mean, we just run analytics, so ours we run at 4% because that's the reality of our market. Mm-hmm. Real estate is very local for the listeners, so what's happening in Florida might be, apples and cucumbers to California or Cleveland or the other markets. So just keep in mind, real estate is very localized. And one of the things that just sort of popped into my mind, which I think is critical, Joe, in mitigating this tenant turnover is who's your tenant. So Joe mentioned 1-bedroom, 1-bath, and I say stay clear away from that. The reason is because as soon as you go to a 2-bedroom, 2-bath or a 3-bedroom, 2-bath, our tenant profile is a young starter family with a couple kids in the school district. If they're a smaller family that have 1 child in the school district, or it's a newlywed couple that's, it's their first home and they want to start a family, I think that can mitigate so much headache if you get, who's your tenant, what's your tenant profile. So that's a question for your property management. And I can tell you 95% of our families in the 2,000 homes that we that we manage are going to be a young starter family with kids in the school district. And that way you don't have the transient type. Mom and dad work around the corner and the kids go to school. They can walk to the end of the road and get on the bus.
Mhm. So the 1-1 is more for a transient type of tenant.
Yeah, yeah, I'd say stay away.
Yeah, or someone who's going to outgrow it and run out of space and want to move somewhere else.
Yeah.
Okay. How about some leasing strategies? What can tenants do, Brian?
Yeah, you mentioned stagger the leases. We call that stacking. So we use what's called stacking, which is another word for staggering both leases and the sales in any community that we're building. So I do agree with that. I will say again, if you are attracting, it all comes down to who's your client, who's your customer, who's your tenant. And so if you are attracting a young starter family like we try to, um, they're not going to be moving every 12 months. I do say, and I always disclose to all of our clients, the only time that our rental market really slows down, and I guess slowing down is relative, is for about 3 to 4 weeks between coming up here, between Thanksgiving and New Year's. But with that being said, I mean, we run analytics and we always have since we've been in business, and we've had some record months of people moving in and into our properties in the month of December. So I think it comes down to the product. It comes down to who's your tenant, and management is the absolute backbone of this whole conversation. I mean, if you have good management in place, you're going to mitigate a bunch of nightmare.
Okay. And you mentioned the holidays coming up. That is a slow time, especially in cold climates like Chicago, where there's ice on the ground. People don't move.
People are moving to Florida. They were moving to Florida before COVID, and now you have a mass exodus coming out of the Northeast, where I actually grew up. So I'm speaking from experience in New York and New Jersey and Connecticut. People are fed up with the city and the cold and the taxes, and they're moving south. So um, as of last Tuesday, our numbers are just as strong as they are throughout the year for rental move-ins.
Okay. And when do they pick up? After the
Um,
holidays? January?
they don't slow down really, to be candid, but the best month from experience, and I'm just giving you averages over 25 years, is tax return season, which is February and March. People
Mm,
get a chunk of change from the IRS, and that's their security deposit in their first month on helping them to move. And so hands down, I think February and March, and I think you'd probably find that throughout a lot of the markets throughout the country because it's tax return
tax return.
season.
Okay. I've also heard that wives can't get their husbands to go looking at properties on the weekends as long as football season is on. And then
Well,
after the Super Bowl, the first weekend in February, then things start to pick up. Have you noticed any Super Bowl effect, or is it mostly the taxes?
yeah, again, we have beautiful weather where we are. It's a
Mm,
non-event for us. I
okay.
do see that being an issue, and you mentioned the cold. I'm sure that's a big issue in a lot of the northern states.
Mm, yeah, or big football towns like Dallas or Pittsburgh. All
Man,
right.
it's crazy when we're prioritizing U.S. football over where we're moving our families, isn't it? I'm not being judgmental for anyone listening.
All right. What about 2-year leases or extended leases?
I love them. So, but the problem with that is you pick up one end of the stick, you have to pick up the other. So you mentioned there, you might get stuck with a not so great tenant. So it's just something to consider. The one thing that I will say is that I love that it takes 17.9 days for us to fill any vacancy. So we again get really anal on our analytics. So we know that within 18 days, usually there's a move in. As soon as you go to a 2 or a 3-year lease, which we do talk to the owners, the individual investors, and tell them that we can do that for them. The rub there, or the con of that is now your pool of families that want to rent from you go from this to this, because a lot of people don't want to lock in for 2 or 3 years. So your 18 days on the market might turn into 45, 60 days on the market. So is it worth to give up, have that downtime and lose that cash flow to have that guaranteed 2 to 3 year lease? So my opinion is, and my experience is, 12-month leases, and almost 9 times out of 10 they renew another couple of years, because we know that the average stay is 36 months.
What about offering an initial 12-month lease, and then if they turn out to be a good tenant, then offer a 2-year lease?
Yeah, like I said, we're totally flexible. I mean, it's all about servicing the needs and wants of our tenants. At the end of the day, Joe, the tenants are the backbone and sustainability along with the management of this whole business model. So we try to work with them within reason. I mean, we can't, it can't be a buffet. There's got to be rules in place. But look, if the tenants want to stay longer, then we're all for it, right? Because that's how the management company gets paid, and it's also how our investors get paid.
Okay. Final tip, make your units sticky. Give your tenants a reason to stay. So one way to do that, of course, is by leaving the rents just a little bit below market rate. So here's a math example for the investors on the call to consider. So let's say a tenant's paying $1,000 a month, and you want to raise the rent $25 because the market could support it, and the tenant leaves. Well, here's the cost of your vacancy. You lose 1 month's rent at least. You might have to pay $500 to clean the carpet and touch up the paint and make any repairs. And then you have to pay a leasing fee, which will be at least half of the month's rent. So you're out $2,000 because you got greedy and tried to raise the rent by $25. Now look at how long it takes you to break even on that. The $2,000 you lost, it'll take you 80 months, like 7 years to make up for the $25. So if you have a good tenant, is it really worth trying to squeeze every last dollar of rent out of them? Or is it better to just do a smaller rent? So you could leave the rents the same if it's a really good tenant, or do what some people call a nuisance rent, which you raise the rent maybe $10. So it's not as high as market rent, but it's just enough to annoy the tenant, but not enough to make them want to leave. But it gets them in the habit of expecting a rent increase each year. What do you think about this approach?
I love your scenario, Joe, and I'll flip that on its head. So in the scenarios where we do offer a 2 or a 3-year lease, because number one, the investor wants it, and number two, there's some families out there that want it as well. We'll actually incentivize them the other way. So we'll say in this scenario, start at $1,000 a month a rent. If they sign a second and third year, we'll actually give them a discount of $25 a month to guarantee, because the math works the same way. If you just flip that scenario on its head, I'll take $25 less even to guarantee a second and third year. So we incentivize them the other way. It's sort of counterintuitive, but the families love it. The investor loves the stability. So it's really just a case by case scenario. But I love the fact that you actually played out the numbers there, because the numbers don't lie. Who wants to wait 80 months to make back their $25?
Yeah. Well, the thing is, what I've noticed is that the best tenants have options. If you're a good tenant, you have a good payment history, you have a good job, good work history, you can rent anywhere. You can rent a house, you could buy a house maybe, you can go to an apartment complex. So when you try to squeeze the last dollar of rent out of people, the people with options can leave, and you'll be left possibly with the people that don't have options. And I just don't see that as worth it necessarily.
Yeah. And another reason to stay is the best product in the street, right? Give them something new, that things aren't breaking and everything's nice and clean and new. I mean, the product is always a big risk mitigation factor.
Yep. So having the better product, like you said, better fixtures, tiles, countertops, appliances. So they know that for the same amount of rent, they're never going to find a place as nice as the one you provided them. So that's another reason that they'll stay.
In our model, Joe, and again, this is not salesy, it's just to help the investors, ask questions and think, what should I be thinking about? What should I be looking for? We use the same exact finishes in our build to rent product that we do for our retail buyers. So if we're building, two infill lots, the one on the left is for a retail buyer, the one on the right is for our tenants. The finishes are identical. It's still going to be granite and stainless, and so that's how you avoid tenant turnover. Just give them a really good product.
Right.
What that also does is allow the investor, when they go sell it on the retail market, if they decide to do that in 5 or 10 years, is they don't need to do any upgrades. They might need to do some paint and some, professional cleaning and landscaping, but the finishes in the product are as if it was a retail buyer.
All right. Good ideas. And finally, location. Location is always good. Public transportation, daycare, shopping. Public transportation is especially important for Section 8 tenants. I know you don't deal in that space, but some of our providers do. And being close to public transportation is a big help. They can just walk to the bus stop half a block away and get around. You don't want a property right at the bus stop because the tenant will be sleeping and people will be outside smoking and talking while they're waiting for the bus, and you'll have tenant turnover. So it's just down the block from the transportation. That's the
Great,
best place.
great point, Joe. Tucked back in the neighborhoods is where you want to be. Ideally in a cul-de-sac, but obviously you can't make that
Yeah,
happen on every.